we start in the block 2. It is the unit 3 or 2 of the tax planning of partnership firms and LLP. We will discuss in the overview of the firm and LLP and section 184, section 185 and book profit and computation of total income of the firm and computation of total income of partners, computation of tax liabilities and taxation of LLP and surcharge, and we will be practical questions and we will be reach the conclusions. And now we will be start and we will be start and we want to knowledge about what we will learn about after this complete this unit and assessing the tax complaints of partnership firms and LLP. What is the meaning and what is the benefits of the study? Optimizing the capital structure of the partnership firms or LLP to maximize tax efficiency means after this study we can learn where the minimize of the tax and what is the benefits of where do investment then we can pay the minimum tax and we can use the maximum the tax planning and legally reduce the tax burden on the partnership firms or LLP and as per legally how we can reduce the tax as per the tax planning and analyzing the non-compliance of tax rules and regulations. And now we start when we start we have already discussion about regarding of regarding of in block 2 already discussion is the AOP, BOI and HUF into undivided family and individual taxation. Same we will discuss in the same as process, but we want to start now before just you overview. We have already discussed the tax planning and what is the uses of the tax planning. So here is the we want to knowledge about the tax planning, but we want to add how how will we use is the tax benefits when we prepare the tax planning. We can use we can take the tax benefits. But before all the planning, you everybody know that what is the use and what is the purpose of this planning. First of all, we will discuss, my dear students, that any name can be uses and planning and what is the uses of a firm and what is a firm. Any name can be given. Any name can be given a firm between 2 and 3 as long as you fulfill below mentioned conditions. The name should not be too similar, identical to an existing firm doing the same business. It means we cannot use for the purpose of this in this scenario for a purpose and we will use and how it will be practically helpful or a firm. A partnership is one of the most important where the two or more peoples come together to form business and divide the profits thereof in an agreed ratio. A partnership forms easy to form and the compliance is minimal as compared to companies. The name given the to firm is name for the optional. If we are starting a business and we start to a business, then we apply for the name. We can we suggest the two names. Maybe the name say if you are do you like any one name to prefer to ROC, it not will be acceptable. You will give to two and more name because maybe one name may be same similar to any other those companies, those firms and companies registered under the ROC. And how it is very typical that name not be similar, and what is the benefits and for the firm and organization. How should be agreement between partner deeds? A partnership forms as long as you fulfill agreement between the partners in which rights, duties, profits, shares and other obligations of each partner is mentioned. Partnership deed can be written or oral, although it is always advisable to write partnership deed to avoid any conflicts in the future. Okay, we will be more discuss in this maybe details. It may be name, address of all the partners, nature of the partners, business, date of starting of business, capital and contributed by each partners, capital to be contributed by each partners, and profit and loss sharing ratio among the partners. Specific details apart from the certain specific clauses may also be mentioned to avoid any conflict at a later stage. It is the general details we have already discussed, and specific details may be specified is very necessary. Certain specific clause may also be mentioned to avoid any conflict at a later stage. Interest, number one, interest on capital invested, drawings by partners or any loans provided by partners to firms, salaries, commissions, or any other amount to be payable and to partners. It means what would be salary if partners, and what will be commissions will be, it will be clearly mentioned in the deal. Rights of each partner, including additional rights to be enjoyed by the active partners, duties and obligation of all partners, an adjustment to be followed, an account of retirement or death of a partner, and disclosure of the firm. My dear student, you have already studied in the 12th class is the when you and 12th class and the BCom when you do study the partnership firms. What will be your uses for the partnership firms when you deeply knowledge and you have the knowledge of the practical? But in the tax planning, we will not more detail in the discuss that will be what be the uses of the partnership firms, and the what how will be calculate of the formulas of the after the death and retirement of the partners. We will be here in the discuss on the profit, how will be minimized as the purpose of the tax planning, because we cannot we don't want to like to payment to extra. We will want to by tax planning use for the or features of organization and a firm and or company. Other clauses are partners may be decided by mutual discussions, and it is very necessary that as per Partnership Act 1932 governs the partnership. Registration of partnership firms is optional and the discretions of a partner. It is always advisable to register the firm since registered firms enjoy special rights which are not available to the unregistered firms. And if a firm registered, it is the Form 1 required and special affidavit and original copy of partnership deeds, proof of principal place of business, and the registrar is satisfied with the documents. He will be registered the firm in a registered firms and issue certificates of the registrations. Registers of the firms contains up-to-date information on all firms and can be viewed by anybody upon payment of certain fees. And now, what is the LLP and the discuss a limited liabilities partnership. This is the partnership forms is the two parts is the LLP and UL. LLP is flexible legal and tax entity where every partners has a limited personal liability for the debts or claims of the partnerships. Partners of LLP can benefit from economics of scales by working together while also reducing the liability for the actions of other partners. As with any legal entity, it is very important that you check the laws in your country and your states. For example, India, Uttar Pradesh, Madhya Pradesh, and Delhi, Uttarakhand. If you are taking the decision, first of all, you check the lawyer. The chances are good that they have first-hand experience with an LLP. LLP allow for a partnership structures where each partner's liabilities are limited to the amount they put into the business. Having business partner means separating risk, leverage individual skills and expertise, and establishing a division of labor. Limited liabilities means that if the partners fails, then creditors cannot go after a partner's personal assets or income. LLP are common in professional business like law firm, accounting firms, medical practice, and wealth management companies. I'm repeating again, LLP are common in the professional business. I will be more detailed discuss in when we discuss the business and the profession. In this definition, it will be clear. If you are doing the business, professional business like a law practice firm, like a chartered accountant and company secretary maybe, and ICWA also. Medical practice, is a hospital in the hospital management and how it will be tax benefits, governments providing too many tax treatments benefits for the hospitals and because they are providing to health policies by insurance and the wealth management companies like mutual funds companies. Now it is very important is the next point is now is very important point is in India various companies models exist like company LLP, HUF, etc. As when more than one or two persons are willing to start business solve may not be appropriate from whereas the formation of companies requires sufficient amount of funds and calls for various compliances. Thus, in such scenario, forming a partnership firm turns out of the best alternatives. Now, I want to some point here discuss to understand an LLP. It is the best start with general partnerships. Of course, with the informal nature of general partnership, there is no downside. The most obviously risky is that of legal liabilities. Sorry. In general partnership, all partners share liabilities for any issue that may rise. For example, if Jain and Agarwal, if Jain and Agarwal are partners in a venture and a bad batch result in the people getting sick, then they can both are personally sued for damage. For this reason, many people quickly turn general partnership into formal legal entities to protect personal assets for being part of any lawsuits. The actual details of an LLP depend on where you create it. Your personal assets as a partners are protected from legal action. Basically, the liability limited in the sense that you may lose assets in the partnership, but not those outside it, your personal assets. The partnership is the first target of any lawsuit, although specific partners could be held liable if they are personally did something wrong. Forms of business in India, various business models like proprietorship, company, limited liabilities partnership, HUF, etc. These partnership forms is one of the popular and widely accepted of a business where two or more persons are intending to carry on any business activities. As when more than one, two or more person are willing to start business, sole proprietorships may not be appropriate from whereas formation of a company acquired to sufficient amount of fund and calls for various compliances. In such scenario, forming a partnership firm turns out to best alternative. Since partnership as a form of a business has its own limitations like no separate legal loan limited liabilities. Capital funding and partners are now including towards conversion of their partnership firms into a limited liabilities partnership, having the features similar to a corporate. Now I will be discuss LLP reason for conversion of a firm into LLP. Why we are partnership firms is that converted to LLP. Is the many points here. First is Major reason behind converting a firm to liabilities, limited liabilities partnership is to get high credibility and move a ladder up in a corporate sector. LLP is a form of body corporate and gives more brand recognitions and increases value in the market when compared to the image of a partnership firm in the business field. It is certain that any investors or banks give more preference to an LLP. It means if you are going to for loan in comparison to an unregistered or registered firm. Further conversion into LLP gives the firm status of a separate legal entity. It gets registered the database of Ministry of Corporate Affairs (MCA). MCA means Ministry Corporate Affairs. A partnership firms which got itself registered under the LLP Partnership Act 2008, whereby partners intended to carry an objective clearly mentioned through an agreement is known as an agreement or limited liabilities partnership. It is very important that is the features is the LLP Act 2008. Number one, status of body corporate. LLP is a body corporate which enjoys a status of separate legal entity. Thereby, partners and LLP are considered separate from LLP, and partners may come and go, but LLP will remain in existence. Designated partners and partners. Number two, LLP shall have at least two designated partners who are individual and at least one should be residents in India. Body corporate can also be members of LLP where nominee such body corporates will be considered as designated partner. It is number third is LLP agreement. All the mutual rights and liabilities of a partners will be governed by LLP agreement, including duties, objectives, terminations, and other important clause. Partner status number four. Every partner's LLP is an agent. It means agreement and status, duties, objectives, and LLP as agent LLP for the purpose of carrying business of LLP. And fifth point is liability. Partners are not held personally liable directly or indirectly. Reason of the being partners unless they have acted without authority and waged close partnership by wrongful act. Here is the partnership forms in the two types. It is a limited liabilities LLP and ULP. We have already discussed. Just only here the picture. LLP is very important, and this is very important for your knowledge. This is very necessary. LLP and ULP. LLP is the better for the ULP. Here is the some discussion points. Difference between LLP and ULP. I will be discussing here more detail. On the basis of liability, we are discussing on the basis LLP and ULP difference between on the four parameters in the liabilities, legal, management and governance, and compliance and regulation. First of all, in liabilities, as per we have already last in the detailed discussion, but I am giving to here. Here is the overview of the difference. Each partner's liabilities is capped at the amount of capital they have. As per the partners, suppose one person is coming with 4 crore rupees and one person is coming for 40 crore rupees, that is not equal. Partners in a uniform, they are personally liable identified. Now is the legal structure number 2. LLP, independent legal company, when existing independently of its businesses, functions are general partnership in which are the ULP. And third point parameter is management and governance. Partners in an NLP may be able to arrange the management and governance of the company with greater freedom. Partners may choose specific partners to observe the partnership operations, or they may actively participate in the NLP management. Now is in ULP. Partnership in ULP entrepreneurs usually have equal right in the management and decision making of the company. The provision may change the management structure and decision making power. And in compliance and regulation, the Limited Liabilities Partnership Act standard compliance obligation that apply to LLP, accounting, auditing standards, keeping statutory records, etc. ULP companies face less legally strict regulations. They must nevertheless, however, able to including preparing business registration, tax legislation, and laws. Overall, choice between LLP and ULLP firm depends on various factors such as nature of business, the risk tolerance of the partners, level of personal liabilities protection. LLP more limited liabilities protection of the partners. ULP firms may provide more flexibility in management and governance structures. Partners to carefully evaluate their options, see legally advise, and determine the most suitable business structure of their needs. It means partners' needs. LLP and ULP partnership can be divided into two groups. The two groups is also here in the diagram. Firms fulfills conditions section 184. Income will be chargeable under the head PGBP. Interest Interest and remunerations payable to partners are deductible subject to section 40B. Firms does not fulfill the condition of section 185. Provision of section 185 will apply. Interest and remunerations payable to partners are not deductible. We will be continue will next lectures, and we will be discuss all two conditions with a practical example. Optical and practical example.